Good afternoon. George Cavaligos for HFT Bonds. Second take. Let's hope this one works. Fingers crossed. All good, right? Let's see. What did we talked about last night? Trying to buy a dip in the treasuries when the 10-year got down to 0103 area. Well, the low was 04 plus, and my bid didn't get filled, unfortunately. I think that's a sign of the strength, obviously. You know, how we talk about the market pulling up short of reaching support levels in a bull move and falling short of resistance levels in a bear move. Happens a lot. I probably should have preempted that bid, but I probably would have put a 4 bid and I still wouldn't have got filled. It happened again this morning. The first trade, I think, out of the gate. Tried a small short on a little reversal that we saw going into the auction. I thought we'd see a little bit of a dealer concession. Got a nice little 30-minute sell signal. Haven't seen too many of those lately. Ended up turning a winner into a scratch because the market pulled up short again of reaching support. Support was, I think, 11. We got down to 12. We're short at 14. Ended up scratching that trade. Tried another short. Got stopped out for like a 4 or 5 tick loser, and that was it for the day. Moving on, tonight, look again, 8 days in a row we've been higher in treasuries. We haven't done that. As far back as I could look was 08, and I can't find anything 8 days. I think 6 was the previous record between now and back to 08. So now we're on day 8, higher prices. How do you trade that? Maybe you buy those October 132 puts like somebody was buying in the pit today. They paid 3 ticks for quite a few of those October 132 puts. There was also a big call seller today, so it looks like the dealers are starting to take some chips off the table and buying some cheap insurance. Now, if I see them buying some higher priced options, some higher priced puts, I'll get real excited at that point. We'll see. Tomorrow's Thursday. We have the 7-year auction. We have a lot of data tomorrow. Excuse me. It's going to be an interesting day. On the charts, we're looking at a couple interesting things. There's a bunch of old highs on the D's contract at 133.26 to 27. Starts also, if you look at a continuation chart, my charts, they roll on September 1st. So on August 30th or 31st, whatever the last day of August was, they were still charting the SEP contract. That chart stops at 134.02 or 03. So there's a little, what some chartists call a continuation gap. Probably not that meaningful in the real realm of things, but there is a tendency that I've noticed over my last 20 years for the market to fill those continuation gaps. So keep that level in mind. 133.26 plus up to 134.02. That's it. We'll keep an eye on that. Otherwise, we're going to go and look at the old highs up there on the D's contract. The last high up there was, around 134.08-ish. And that's the next big level for the market to test. So I don't think we'll see that tomorrow. I think we can get a decent corrective day tomorrow. In the old school days, the 7-year auction was sort of the red-headed stepchild of the Treasury curve. Nobody really liked to buy it, so it was always kind of a crummy auction. These days, the Fed is concentrating a lot of their POMO purchases in the 7-year area. I think that is the most heavily bought sector of the curve. So, going into the buyback tomorrow morning, if there is one. I didn't check the calendar, I'm sorry. But we'll see what happens with the buyback and the auction tomorrow morning. Tonight, I guess if we can get a bit of a dip back here, again, support's going to be that 12-14 area. I'll throw some bids in there overnight, and we'll see what happens. On the upside, if we get up to that 26, 27 level, I'll throw some offers in up there, and I'll put it up on the chat room. Make sure I note any kind of trades I put up overnight for you guys. Like last night, I didn't get filled, but I spoke about it in the video, so I hope you're all catching these videos, guys. Have a great night. We'll see you tomorrow.